Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders and taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
For the weekly outlook, I'm looking at ForexFactory.com's calendar to look at the events that are going to happen this week. And on Monday, December 4th, we have not a lot. In fact, the only thing that we're really looking for December 4th, you'll see here at 10 o'clock is factory orders. And at the time I'm shooting this, it's already past 10 o'clock, so that number has already happened, and it's less than expected, which is a good thing since it didn't go down as much as they thought. Factory orders are very important for macro views, and I pay attention to it to give me an idea what's happening in the near future, the next 2 or 3 months. So you want to see the factory orders going up over the foreseeable future, as in that means more economic activity is going to happen in the future. There are some red events, mostly the Aussie dollar. So if you're trading the 6A, you want to be careful around 7:30 current account retail sales at 7:30, as well as at 10:30 p.m. there is a Royal Bank of Australia rate statement. So there will be some volatility coming into the Aussie dollar to 6A. Later on today and into this evening. Now, looking out further, Tuesday we have a couple of red events. The one that's of particular interest for the U.S. is the IMS non-manufacturing PMI at 10 a.m. And that's really about it. 8:30 there is trade balance, Canada. Trade balance as well as the U.S. trade balance. Both of these numbers don't really affect the U.S. dollar at least too much, or the U.S. markets, but they can have an impact on the CAD or the 6C, so do pay attention to that. On Wednesday, we have some CAD red numbers. Bank of Canada rate statement, that'll be a big one at 10 a.m. on December 6th, and the overnight interest rate will also be a big factor. 10:30. As always, we have the U.S. crude oil inventories. This will always affect the crude oil market. So always watch for that. That's a weekly inventory rate or report, and need to pay attention because it will affect crude oil. It can pop anywhere from 15 to 30 ticks. Very, very common to see that. So Wednesday, the big event for the U.S. markets is going to be that crude oil inventory. Looking at Thursday, the 7th, we have very little. The big number is the unemployment claims for the U.S. at 8:30. You can see here their forecast is 241. The previous was 238K. Well, interesting to see what that will be. We also have at 11 a.m. President ECB, the European Central Bank President Draghi will be speaking. I always pay attention. I just avoid trading the euro while he's speaking, because he can say things that you don't even think is sort of off the cuff, and boom, it makes the market react. So I will avoid trading the euro, the 6E, around 11 a.m. on Thursday. Moving to Friday, the other red items, there's a couple of red items that are the pound related or UK related. Manufacturing production of month of 4:30 a.m. I'm not a big overnight guy. I like to trade the markets in the main U.S. markets during the New York session, but some of you obviously can trade the London Open at 3 a.m. and need to be careful around 4:30 when that red item comes out. Looking forward, again, all about employment this week. The unemployment rate at 8:30, non-farm employment change in hourly earnings from month to month. We'll be paying very close attention This is something the Fed looks at. We should look at as a reason to what's going to happen, or it's what's going to happen in the future. If the employment rate stays steady or goes down, very, very good. Non-farm employment change, we want this to go up. They're only expecting 200K, where previous was 261. Interesting to see there. Of course, our average hourly earnings also important, because if hourly earnings go up, it means that people have more disposable income, et cetera, et cetera. That's very, very good. The other one that I really pay attention to will be at 10 a.m., which is the preliminary University of Michigan consumer sentiment and the inflation expectations at 10 a.m. Again, these are not high impact events, but I believe they're extremely important in the macro view. Since the consumer controls about 2/3, around 70% of the U.S. economy, these numbers are extremely important about how people think about their money, and that will directly impact how they spend their money. So I pay attention to these as part of my macro overview. That being said, I'm going to go ahead and move over to some charts. Fix this here. Okay, so I want to look at just a few longer term charts in order to, I like to look at crude as a fear and greed index. Crude's been acting, I would say, almost irresponsibly. No reason why the macro should support these kind of prices. Here we are at 57.80. Again, we've got a area between 57 and maybe 52. That's sort of a, we obviously have one between 58 and 56, a little bump here in the volume. Very interesting here. Just slightly above it, can easily see this coming back into the 56 band here, this 57.50 band. Maybe even highlight that somewhere in here. Very comfortable area for oil to be in. Do believe it's highly overvalued. I would lean to the short side on this particular instrument. Be looking to take shorts. I do think we're going to pull back. The macro side of oil is that there's plenty of supply. Why has price continued to go up over the last month and a half? It's all been geopolitical stuff with Saudi Arabia, and Jay can hit on some of the specifics of that. Gold, my other favorite fear and greed index. I actually use this like an index. You see here we are in this happy area, this high volume zone between 1285 and 1265. I think we'll continue to stay there. A little bit going on over the weekend from a fear and greed perspective with North Korea, more bantering. I can see they've moved some, the U.S. has moved some additional assets into the area. It's just, man, that is a real mess. I can see us staying in this comfortable area for between 1265 and 1285 area for the foreseeable future. With a, as rhetoric gets ramped up, it will rotate upwards as the fear gets sort of sucked out of the market when nothing is going on. When Trump forgets how to tweet, then it's going to meander to the downside as well. So a lot of sideways action in gold related to the fear and greed, related specifically to what Trump happens to say and whatever is going on in North Korea at the moment. Expect to see more of that. The bonds continue on their movement downward. Again, this is not unforeseen, expected due to the fact that the Fed is supposed to increase interest rates in December. And that's all that I've got. So let's